family.
Welcome back to Closing Bell, and let's chat commodities now. And within that space, while we have seen sharp uptick come in for the crude oil prices, but the palm oil prices should be on your radar as well, because we've seen strong gains onto this one in the previous week. The palm oil prices did gain for a second weekly gain, and we saw more than 5% of gains come in for that one in the previous week itself. There are some statements coming in from Malaysia and Indonesia, both the countries. Malaysia and Indonesia are the major producers for palm, and the major chunk of global trade when it comes to the edible oil sector also happens in case of palm. So we have seen Malaysia talk about lower production this time around. We also have seen a weaker ringgit. That clearly has been supportive. And then strong rival edible oil prices have been supportive. Indonesia, on the other side, has been talking about higher taxes, especially for the period of 18th of Feb to 28th of Feb. And there is higher consumption within Indonesia. Indonesia, remember in the past, that was in the last year, also did ban exports, and that did lead to global markets surging on the higher side. So volatility, uncertainty and higher palm prices is what we are dealing with yet again. We are now joined by Sandeep Bajoria, who is CEO of Sunvin Group, to talk more about that. Mr. Bajoria, hi, good to have you. I first of all want to talk about the Indian palm imports itself, because between the months of October, November, December, the palm imports into India were much on the higher side. For the month of January, well, yes, we have seen a very sharp decline on a year-on-year basis. How do you look at, one, the prices, the Indian import numbers and the demand for India going forward?
Manisha, good afternoon to all the viewers. You have very rightly described the overall situation under which the markets are operating right now. Our imports in palm from September to December 22 were very heavy. We imported more than 4 million tons of palm in these 4 months. However, because of the highest stock built up at the end of December and because of the cold season, low demand in palm, imports in January were only 7 lakh tons, and February is not going to be more than 6 lakh tons. So imports are slowing down in the Jan and Feb, but old stocks are still there in the pipeline. That's why, and the cold season is just about, which has ended. So that's why palm consumption and palm movement was slow in India, and hence we are importing less. At the same time, Indonesia has put some restriction on supply because of the Ramzan festival, which is coming. So they want local supply to be available very much to the local population. So they have asked all the exporters to see that domestic market obligation is met with, and earlier rates in domestic market obligations were partially removed. And they said up to 30th April, you need to augment supply in Indonesia. Maybe from first week May onwards, they will relax the things.
Okay.
So that's why palm prices have gone up in last 8 days. We have seen 300 ringgit, about nearly about 8 to 9% increase in Malaysian index price. As while in dollar terms, it has increased $75 per metric ton from $970 to $1,045.
Sure. Mr. Bajoria, also the kind of moves that we've seen in the edible oil as a sector in the previous year has been very volatile, from nearly all-time highs to a very sharp decline in case of prices. But at these lower levels, we've seen most of these edible oil prices start to surge yet again. What is your sense? Because the crop estimates, the availability looks quite well right now, but the international cues is something there is a lot of uncertainty coming in from there. What's your sense on the prices from here, let's say with the visibility of a quarter or more?
Manisha, the prices are now, as far as the soft oil is concerned, soybean and sunflower oil, they've come down pretty much from level of about $1,400 about 2.5 months back. Today, we are dealing about $1,200 in soybean oil and $1,170 in sunflower oil. And palm oil has only increased because of the Indonesian temporary restriction of supply.
Okay.
But from May onwards, April, May onwards, the production also rises in Malaysia and Indonesia. So I think there will be pressure on palm prices again. So I would say this year is the year whereby the upside and downside both are limited. Not more than 8% upside from here and not to more than 10 to 10% downside from here. So the volatility for the year 2023 is going to be minimized. Not unlike 2022, where we saw 50 to 60, 70% upside, and again the market coming down from $800 to $2,100 and $2,100 to $800 in case of crude palm oil. Those days are gone. Year of 2023 is more of a stable year, limited range year, under which we have to operate. I believe these are very good times because for consumer also the prices are reasonable. Import duties are only 5.5%. As for the processor, it may require less working capital. and processor is happy that if we can supply oil to consumer at a reasonable prices.
Okay.
Only problem, Manisha ji, what is we are seeing is because the duty difference between CPO and Olein is low in India. We are seeing the Malaysians are selling RBD Olein $15 cheaper to crude palm oil. And that is causing the distortion here in the Indian refining industry, and refining capacity in palm is reducing.
Okay.
That's a cause of concern. So government of India needs to increase the import duty on RBD Olein, which is finished product, by at least 5% from the present level. That will help the Atmanirbharta and domestic refining. Yes. One more thing, as we see the rape mustard crop, last year was 10.5 million ton the rape mustard crop. This year also looks like 10.5 to 11 million ton, which is a very good crop. And I believe this year the consumers of rapeseed mustard seed oil also will be very happy. But as the prices are nearly near to the support price, I believe in March government will have to ask NAFED to get into act of procurement to support the MSP for rape mustard, which is about 54.50 per quintal. And NAFED might have to buy at least 2.5 million to 3 million tons of rape mustard seed to support farmers if will increase the duty on RBD.
Yes, there are a lot of asks yet from the government, as you said, Mr. Bajoria, and the duty difference is something that has been a long pending ask from the government, and we hope they look at that too. But my final question to you is about El Nino, and that is a concern really for overall agriculture as a sector moving forward, as Indian agencies and international agencies also seem to be pointing to that. Are you factoring that in prices also?
Yes, this is a new phenomena which is just last week, which has come in. And I think market is yet to price in on that.
Okay.
Waiting and watching. But I think from Indian point of view, this is a cause of concern, because if our monsoon are not normal and they are subnormal, then our kharif oilseed production can suffer. So I think we'll have to watch this very carefully. But world has enough oil. Although this El Nino here, and even the Argentina, there is a drought situation. So these two are the problematic situation. But however, Brazil and US has got a fantastic crop.
Okay.
And Malaysia, Indonesia also, the production is going to increase from April, May.
Right.
So there is much cause of concern on the world veg oil prices. But definitely, Indian scenario, we have to be careful and watchful.
Absolutely. Well, weather a bit of a concern, but with the kind of availability and the inventories that India has in sense of edible oil, perhaps we will be spared that uncertainty and much price rise from there. Mr. Bajoria, as always, thank you so much for joining us and putting light on the soft commodities there. But moving on, and as the world prepares to mark the one-year anniversary of Russia's invasion of Ukraine, the US President Joe Biden pays a surprise visit to Kyiv. Here are some of the visuals coming in of Joe Biden meeting Ukraine's President Zelensky, and of course the kind of conversations that they have been having. And as we wrap up this edition of Closing Bell, we leave you with some important market opinion coming in from Sanjeev Prasad of Kotak Institutional Equities. Thank you so much for watching.
I'm not that surprised that you are seeing, some amount of earnings cut. I suppose these are more in the discretionary space. Having said that, these are reasonably well flagged. If you look at our own numbers, we haven't really changed anything in the last 6 months now. I know there have been some minor downgrades for some of the discretionary names, but otherwise, earning numbers have been pretty much broadly the same in our case, at least for 23 and 24 for the last few months now. The real estate part, demand so far has been holding up reasonably well. But I suspect this is more to do with longer-term factors, nothing, in terms of a sudden increase in affordability of households. If you look at the last 5-7 years, real estate prices haven't gone anywhere, which means over the last 5-7 years, affordability has gone up significantly. Real estate prices effectively are down in real terms. So I assume that itself is, a big driver of volumes now. Plus the fact that over the last 6 months in particular, you have started to see finally real estate prices in some of the major markets starting to move up. So that may also be acting as the catalyst now for households to start looking at real estate more favorably. So if I look at the short term, as I was saying earlier, we do expect some acceleration in volumes of basic or staple items going forward. If you look at the multiples, some of the staple names, they have not really related compared to the pre-COVID time frame. So assuming you continue to see, income growth, job recovery, all the good things in the next 2-3 quarters, I would assume, volume numbers should start coming back for the staple name. Some of the names like a Crompton, etc., valuation is not that bad, it's about 35 times on a 12-month forward basis now. there could be possibly some more earning downgrade, but I think the worst of the bad news is probably seems to be priced in over there.